ability to speak the language, and some level of experience that you've done it. Founder CEO of Virtuoso Capital Ventures. I hope I said it right, Rick. As the name suggests, they specialize in asset management, real estate capital investment, and placement of private investors' capital in high-yield real estate investment. The man who does it all, himself, Rick Genovese, with me today in his own words. Hello, Rick.
Hi, Daisy, and thanks for the introduction.
How was it?
It was great.
Was it short of something, or are you going to add more to it?
No, you were spot on. Absolutely.
Perfect. Awesome. Thank you. First of all, thank you for taking the time to talk to me today, Rick. A lot of people have asked me being in this business, everybody wants a deal. Everybody has a lot of money, but yes, they're very, very strategic, the placement of their funds, where they're investing in. So I thought, you know what, who else other than you to talk about this one? If somebody has a lot of money and they would like to make an investment, what is the best way?
Yeah, so what I tell investors and what I help them to understand is the safety of multifamily investing, and that's to me probably a challenging thing for people because they're not used to seeing multifamily investments come in front of them. So they refer to investing as mutual funds, stocks, things like that. There are sophisticated investors, of course, that understand multifamily investing. When you put a pro forma in front of them, they understand, they can read through the pro forma, and they understand the benefits of investing in real estate. And a lot of smaller investors have challenges with that because they're not used to seeing that. They're used to going to the bank, getting an RRSP and investing in RRSPs, and there's a misconception that that's safer than approaching someone like me or me approaching them and them accepting an offer to invest in an apartment building offering. The thing is, when you look at the statistics of apartment building investing, it's extremely safe, and it's the safest asset class in real estate. And that's very easily backed up through the pro formas that we create for investors. When an investor sees those pro formas and we really explain what's going on in real estate and how it compares to the stock market, mutual funds, those sorts of things, that all are tied to the volatility in the stock market. You'll see that the volatility of apartment buildings, it's much lower. And in fact, there's very little drop at any time during recessions in the valuations. What typically happens in apartment buildings is the value of an apartment building will plateau and then it'll start to go back up again. Whereas stock market, it goes down and then back up.
A lot of peaks and valleys.
Exactly, it's peaks and valleys. In apartment buildings, there are very few peaks and valleys. So they make really good investments. I call, and the difference between an investment and a speculation is when you're betting on things. Yeah. So if you're betting on the stock market, you're betting on essentially what you're doing when you're going to the bank and you're buying RRSPs and mutual funds and all that. You're betting that they're going to go up, but they go down as well.
Yeah.
Whereas in multifamily, it only ever goes up or plateaus. It doesn't really go down. So that to me is investing, not speculating.
Yeah. As you said about speculating, and now of all the times, the speculation versus the creativeness of real estate is the key, I guess, rather than speculating on something that we don't know where it's going to go. Isn't it better to go into more of the creative part of investing?
Yeah, in terms of the creative side of investing, what we see a lot of developers do when they go to build apartment buildings or they build condos, they don't really look at the long-term hold and they don't calculate out the benefit of a long-term hold. In our pro forma and in our analysis, we lay out a long-term hold over the 10 years and the benefits to the investors that they'll receive over that 10-year period. And in doing that, it really helps them to understand why you would want to put your money in multifamily real estate versus the stock market, because it becomes very clear how steady the returns are over time.
That's great. So Rick, you specialize basically and you have a portfolio in multifamily real estate. Am I right?
Yes.
And can you tell us a little bit about it? If somebody wants to go into it, how can they be part of that, or can you guide them, or
Sure.
how does it work? Do you need a lot of capital, or can you work with something small as well?
Yeah, so what I do is I create real estate investment opportunities for investors. I do that by creating land development projects that are apartment buildings. I don't do condos because I think condos are tied to the volatility market, which is the single family residential market, which is much more volatile than the apartment building market. So I only do apartment buildings.
Okay, so
Eventually, at some point in a project, it may become feasible to sell condos, but we're going to start the projects as apartment buildings. And for investors, the minimum investment is typically about $100,000, which our current offering is, which is Villa Virtuoso, a 32-unit apartment building in Langford. And in that investment offering, it's a minimum of $100,000. We're offering for our raise opportunities for investors that total $3.2 million. So essentially, if there's 32 investors, then that would, at 100,000 each, that would fulfill the full offering. But an investor can come in with $500,000 if they wanted to. If they don't have $100,000, they can partner with some friends or other friends and family that they know, and they can put together a syndicated joint venture that with a corporation, and the corporation can make the investment if the family wanted to do that together. So there's multiple ways to do it. And also the investments are RRSP and TFSA eligible. So so our project is certified by the BCSC, the British Columbia Securities Commission, to accept and self-directed RRSPs and TFSAs, or RIFs, or RESPs.
There you go. So there's no risk at all, and it's pretty safe.
Exactly. There's very little risk, but the benefits are huge. Our current project, and I have to just say, the BCSC requires me to talk about the disclaimer. The disclaimer is, okay, I'm gonna state some returns, but these are estimated returns, right? So there's nothing guaranteed, nothing warranted. And so our initial return on this project that we're working on right now, and that's on offering, Villa Virtuoso, which is a 32-unit apartment building, it's on the first year of operation. When we move from the construction loan to the operational loan, our value gap, or from the cost of construction to the value of the operating property, has about a $4 million spread. Wow. So essentially there's a $4 million profit in there. So that $3.2 million will be paid back to investors on that first year.
Wow.
So essentially you put $100,000 in, you get $100,000 back out in the first year of operation, plus you get a bonus, because there's an extra $1 million there still, plus you get a bonus equity burst on that first year. And then after that, the returns for $100,000, the returns are about $16,000 on the first year, 17, 18,000, and they just keep going up because the property keeps increasing in value. So essentially, if you take that, if you invest the 100,000, you get the 100,000 back, plus another 70,000 on that first year. So you've got 170% return on year one.
Wow.
Is that ridiculous?
That's on a priority basis too, right? That is the priority base. That's on a priority basis, the $100,000 back to them. That's the first priority.
Yes, exactly. And investors benefit from first right of benefit on the on the returns.
Wow.
Exactly. And then so every year after that, you're doing, you know, $16,000, $17,000. So that's another 16% return or 17% return year after year. And it goes up every year. So
Yeah.
it's 16, 17, 18, 19, you know, and so on and so forth up to 10 years, which is the life of the hold that we're estimated.
Wow. And even if it does go down a little, I'm sure it'll catch up to the end. That's how real estate is all
Yes,
about. And you got your money
exactly. And
back
so
already up front.
yeah, so we've built in a 3% annual increase into that model.
Mm-hmm.
Right? So if we beat that 3-year annual increase, which we can do by turnover, because 3% really is just the minimum that the Rental Tenancy Act allows us to raise rents every year.
Wow. Okay. That's
And
good to
so,
know.
but if we do better than that, which you can usually do by turnover, so if you have a unit that's renting for say $1,100, and then the next year somebody moves out and rent's gone up to $1,150, then we make another $50 on that unit
Per
per
month.
month. Well, that adds up substantially in terms of value,
Wow.
and so that would be bonus value that investors would see. And like you said, if there is a plateau or a small correction, the average will still be 3%
Mm-hmm.
of
That's for
growth.
the safe side you kind of predict to begin with.
Yeah,
Safest,
exactly.
safest way of people, to keep in mind. That's
Mhm.
good to know. So, Rick, what made you do this? How did you start, and what's your portfolio like?
Yeah, so I started this journey because I really, it was my dream my whole life. My wife said to me when I met my wife, you know, I used to talk to her about I was going to build apartment buildings, and then one day in 2000 we met in 2002, and then 2006 we got married. In 2005 we got married. We moved here in 2006, and in 2011 there was a situation in you know, I was in a day job, and my history is all construction and building, and I was construction manager and in after sales and service with a water slide manufacturing company. So we designed and built water parks all over the world. And so I had moved my way up into that company into sales. And then in 2008, during the financial crisis, the that business went through a revenue crisis. And
Mhm.
so they had to restructure, they laid off a bunch of people, and I got moved to after sales and service. And when that happened, I said, you know what? I can't rely on this business anymore to support me. I need to figure this out for myself. And I said to myself, okay, so this is the last chance I'm going to get to really go all in on real estate and get rid of my day job and become financially independent. So I took lines of credit. I took an equity takeout on my home, and and then I met some people that were real estate investors that were doing what I wanted to do. So essentially, by the time, and that was in a mastermind. So I went to this mastermind, and they showed me how they were analyzing real estate deals and multifamily deals, and they were buying apartment buildings. Well, within 4 months of learning how they were doing it, I bought my first building.
Wow.
It was a small building. It was only 6 units, but it was the perfect size for me to start.
Yeah.
And then 4 months after that, I bought another building, another 6 units, 6 townhouses. And you know, and then so what I did is I followed that model, which is pretty much the standard model. Is you buy underperforming properties, you renovate them a bit, you increase rents, and then you increase the value, and then you do an equity takeout and you move on to your next project with
Yeah.
that extra capital. So basically that's what I've done over and over from project to project, is reinvesting my returns by improving the properties and improving and making them more profitable, and then taking that profit out and buying new properties. So I'm up
Amazing.
to 88 doors, plus now this new building is another 32 doors. And that's on 4 buildings. This is the 5th one, Villa Virtuoso. Yeah.
Impressive. I remember when I first met you a while ago, Rick, you had a vision board, and that's what you
Yeah.
showed me. And I think that's where the whole thing, Mastermind, that you're talking about was all about.
Absolutely. And, I credit the Mastermind process. And there's 4 books that I've read that I'll say are the key books for creating or for reprogramming yourself for massive success. And the 4 books are Secrets of the Millionaire Mind. That's a T. Harv Eker book. The Science of Getting Rich, the 80-20 Principle, and the 177 Mental Toughness Secrets.
Amazing.
And those 4 books, I study them all the time, and they help me to stay mentally tough and on top of my game, and to be able to reprogram to scale. Because it's an interesting thing, because people think that they can build a business and do things in a different way without reprogramming themselves for that additional success, and it doesn't really work that way. Your subconscious will tell you not to do things. It'll tell you to do things that aren't really supportive to your business, and you don't even know your subconscious is doing it. And so that's how I was able to really accelerate my success, is by reprogramming myself through those books and studies, and with my mastermind group.
That's amazing. Given all that history that you have and all the versatile portfolio that you have, do you have any business tip for people who would like to join or want to do something similar that you are doing, or they can join you maybe?
Yeah. So really, if you want to embark on building a multifamily portfolio, there's lots of ways to do it. And you have to decide what market you want to start in, if you want to start locally, and what asset class you want to start in. And what I did is I looked at, okay, well, what's the highest benefit asset class for the effort that I'm going to put in with the lowest risk. Mm-hmm. And that's what led me to multifamily real estate investing. It's just really doing that cost benefit and efficiency analysis. Because I'm just wired that way. That's kind of how I think.
I know you're super regimented, very disciplined. That's what I like about you, that you have a way to eat, way to do things, which is the key, I guess, being very disciplined about everything you do.
Yeah, exactly. And that laser focus really comes from defining your vision and what you want. And if somebody wants to build a portfolio of apartment buildings, or they want to do fix and flips or something like that, all of that stuff's out there to be done. There are people that are better at those other things than I am. If somebody wants to learn how to do multifamily apartment building, purchasing and or developing, yeah, they could contact me. I would be open to having a conversation about that, or they could join me as an investor. Either way. Yeah.
That's what the goal is today, to help people out, whoever are thinking. Sometimes they're sitting on the fence, especially on a market like that. There's going to be a lot of opportunities. As we said in the initial introduction to Rick, he's all about the introduction and all about the access and activating the whole process when he gets the opportunity. So Rick, what do you do other than doing all this business ventures, and what else? What are your hobbies?
Hobbies, yeah. So my wife and I are ballroom dancers, and my wife is an artist. I'm the businessman in the house. so she's the fun director, and I'm the business director.
Perfect. There's a correlation there.
Yeah, and it works good because I tend to sit and do business all the time, and she pulls me away from that into hobbies and different things. So some of the things that we love to do, and of course these are on my vision board as well, because I only do things that are on my vision board. Nice. That's being laser focused, right? And so we ballroom dance. I've done ballroom dance competitions. I didn't start ballroom dancing until 2008. And actually that's when my wife started teaching ballroom dance, and she would leave for the evening and there would be nobody here, and I was bored. So I thought, oh, well, I'll just go hang out at the dance studio with her. And then I started stepping into the classes and started learning how to dance. And then she turned me essentially into a pro dancer. And so now, she booked us for last year. She booked us for the Relive the Music show. So we do performances in the Relive the Music show, which is a touring rock and roll show.
Wow.
50s and 60s rock and roll show. So we're doing we're doing our dance routines in and out of songs as sort of as backup dancers, and at times as lead dancers in the show, which is really cool. That's been an awesome experience. And otherwise, we do things like we live near Crescent Beach, so we go swimming. We do open water swimming.
Nice.
So we put on the wetsuits and we go out and swim. I like to do that at least once a week. Yeah.
That's wonderful, Rick. You're living in the community and doing things for the community. That what more can you ask?
Yeah, and I regularly contribute to Covenant House. Covenant House is my favorite charity to donate to, and I donate to them regularly and work with Covenant House. And Covenant House, if you're not familiar with it, it's a safe haven for homeless and at-risk youth in Vancouver.
That's so good. It's
Yeah.
just living a life of gratitude and giving back to the community. I think what more human beings should be doing these days. COVID-19 has hit a lot of businesses really hard. Has it impacted you in any way?
Well, so COVID-19, I read a report, or I was listening to BNN, Business News Network, Bloomberg Business News Network the other day, and there was TD Financial, the CEO of TD Financial, talking about asset classes in real estate and how they were impacted so far, and what their predictions were for the impact on different asset classes. And they cited, of course, commercial is probably in the biggest trouble because of businesses shutting down, having to operate differently, that sort of thing. I own no commercial because I didn't think that was as safe as multifamily. And that was a good bet. And I don't own any small residential single family either because, of course, the volatility there, it's because it's not tied to net operating income, the valuation, it's tied to that emotional real estate market. It's going to take probably a bigger correction. Then what he said is that multifamily seemed to be the most resilient. And they were predicting it to be the go-to asset for the REITs that are trying to get out of commercial and other asset classes, that or to shore up their assets that they already have. They were going to be going after apartment buildings to add them to their portfolio. So that's good news for me. At this point, we're zero loss on rent.
Good. So thankful to hear that.
3 months into this, and still no lost rent.
That's amazing. That's
and I credit my team for that. I got lucky. Well, I always say luck is created, but I'm going to say I got lucky because I hired a paralegal, and hiring a paralegal changed my whole business. Okay. So in Ontario, you can hire paralegals to work directly for you. In BC, you can't. They can't work as a paralegal for you. They have to work under a lawyer, same as legal assistants. But in Ontario, it's different. So I hired a paralegal as my property coordinator to manage my portfolio in Ontario. And and she's been on top of absolutely everything, all the benefits for tenants. So anybody who falls behind, she gets on top of them right away and makes sure they know how to access the relief funds from the federal government and provincial governments.
That's brilliant. So in the end, Rick, any business lessons that you learned and like to share with us?
Yeah, business lessons that I've learned. Wow, I've learned so many. Where do I start?
Let's just do the recent one.
Yeah, so most recently, well, I think that the biggest one that I've learned is the right people make all the difference in your business, and the right asset classes, right? If you don't do your research and you make emotional decisions instead of data-driven decisions, you're gonna run into challenges later. And so, because I'm very analytical and I make very calculated decisions in my real estate investing, that's really helped me to avoid a lot of the risks and vulnerabilities other people are exposed to and that they're suffering from now.
That's true. Yeah.
Yeah.
No, I know about you. You're super calculative about everything. I've done performance with you. I've read through them. I've gone through them. They're super thorough, super detailed, which is the key for people who are investing money with you, so that their funds are pretty taken care of. They're not just
Yeah.
thrown anywhere because it's somebody else's fund. That's the good thing about you, Rick, that I always complimented you, and I still do. Um, what are the other things that you would want to add to? How can people contact you to the end if they have any further questions? Yes, they can definitely call me and email me, and I can pass it on to you. But if they want to contact directly to you, what are the numbers and what are the platforms you be contacted at?
Yeah, so they can reach me through my newsletter. Newsletter is the best way because when you receive my newsletter, I just send it out once a month or once every couple of months when there's news to update investors on, and it basically goes through what are the what's the history of all the projects and what the benefits are to investors that they've received. You know, the value of the properties, how they've increased, all those sorts of things, and with the newsletter, it helps people to understand who I am, because my newsletter not only describes the business and the profitability, but it also tells a little bit about how I think and my values and those sorts of things. So that's a great way for people to connect with me. And you can go to my my website to subscribe to my newsletter. Just go to the news on the website, and that's at virtuosocapitalventures.com. So you can go to my website, click on news, and then subscribe to my newsletter there.
That is awesome. I will be posting all the details when I post the video as well, Rick. But I want to take the opportunity to thank you again for joining me. You're always so wonderful in teaching me, and I learn a lot from you. So we'll be in touch.
Yeah, and thanks for the opportunity.
No problem. Take care.
All right, you too.
Bye.